Well, hello, everybody. It is Don Garman again from Mirador Capital Partners. Here we are, coming to the end of April. We are into May, looking forward to Cinco de Mayo and all the other things. And I took my first flight in 15 months or whatever it's been, and I can tell you firsthand that the airports are full. People are traveling, and the reopening trade is not a figment of anyone's imagination. It is in fact real. And so as more people, I think I saw yesterday, half of the US adult population has now had at least one shot. And people, I can tell, are itching to go back to normal, which has implications, many of which might have already been priced into stocks. But I think it's good for the economy, certainly the mental health of a lot of us who are excited to be getting outside the house and resuming whatever the new normal is post pandemic, if that's the world we're describing. I thought I would just check in on the market. I actually wasn't even uh, thinking about doing a video, but now I get pinged from some of you saying, hey, haven't heard from you in a while. Why don't you check in? So for whoever is out there that enjoys the videos, we do these for you. And for those of you who don't ping us, but we notice you watch, we appreciate that. So we'll just share some brief thoughts today about the narrative, right? When we last checked in, we were going into, I think I called it the all important earnings season. So here we are, we're kind of like getting right into the heat of it. We still have a couple weeks to go, but we can read a little bit or decipher a little bit of what the market is saying to us by how stocks are responding based on what they report. And so yesterday was an interesting day. Google, which is a company that we own, it's in fact our largest position as a firm, had an outstanding quarterly number. And what we can infer or learn from Google is, as a lot of the companies, the travel related companies, and, the event driven advertising that happens on their platform across the many different uh, verticals, kind of shut down. That is really starting to come back and giving them kind of a cyclical feel as the economy accelerates. People's advertising interest in Google as a platform is accelerating, and a lot of their moonshot type investments are starting to bear a little bit of fruit. And the business, obviously it's a massive scale business, but it's still showing tremendous momentum. Not a horse in essence we would want to get off at this point, even if there's some kind of pullback after the nice performance after their number today. We're comfortable sort of just riding that one out and owning it for a long time. But we've made subtle adjustments to the strategy, which is to continue to, in essence, pack in exposure to the areas that were less, less prominent a year ago. And that's been a big driver of our performance this year, which I'm very pleased with. Obviously, hopefully you are as well. But and what we're seeing, the other side of the coin, is these companies that were seen to be pandemic winners have been a little bit shunned after they report, because doesn't necessarily matter how good your absolute numbers are. It's only your numbers relative to what was expected. So even if you grew at 200% year on year, and now it slows to 150%, that deceleration tends to get kind of beaten up by the market, and that's been a little bit in evidence. But we're also noticing some separation. The companies that are performing well are getting rewarded, whereas the ones that are even starting to not perform as well than the market expects are getting pretty brutalized. So as always, we are equally mindful of downside, and the downside of what we own and what we hold. And so we're starting to now, at least I am, maybe look at putting in some positions that are going to hedge us or protect us better if this sentiment, which has been ominously calm and eerily stable, a lot of sort of churning underneath without much movement in the indexes themselves, with just a couple of tweaks, that could change really quickly. And so, as you've always heard me say, the time to prepare for that is not after it's happened, it's sort of in anticipation of it. So, those are the type of things that are on our mind. I'm not going to play this video. You know, things are good. We're happy with how things are going. You seem to be as well. We've noticed the inbound calls are certainly. I think we're interpreting that everyone is enjoying the sunshine and getting out and not necessarily bound in the house staring at their screen all day. So anyway, as you know, we will continue when things get rocky and weird, which they will. Then we will be back more active and more in front of you more often. But for the time being, enjoy the spring, enjoy your family, enjoy the sunshine. We're here. Thank you for everything. And until next time, we'll see you soon.